Good day, Jeffrey Friedman, Senior Market Strategist, RJO Futures, with my comments on stock index futures. And I always give you the word of the day. And by the way, today is 8th of June, Monday. So let's start off with the word of the day. And the word of the day always represents kind of the tone, what will dominate the week or the day for trading and what kind of dominates the bulls and the bears. I'm going to have to say, and we do have about 6 different items on the docket, but I'm going to say that it's the FOMC. I'm going to say that people are more concerned with when rates are going to be hiked on the short end of the curve, like Fed funds from the FOMC. Now, I could have said Greece because that is in the news. And will they make the deadline? Will they go all the way to the end of June? And do they have enough money? Will they break away? Will Germany kick them out? Will Germany give them an ultimatum? Those are on the dockets, and we have to be aware of that. Now, have said that, if Greece leaves Germany and the Eurozone, that would probably be very, very negative, in my opinion. But we don't know that for sure, and I don't think that it's going to happen, in my opinion. We do have a G7 meeting, started Sunday, goes through Monday. So that's something to think about, the 7 largest economic countries in the world talking about economics. Our economics here in the United States, we don't have all that much on it, but we do have retail sales, which is one of the driving forces of our economy, represents more than 50% of the driving force, in my opinion. We do have PPI starting off at the end of the week, and that would be at the wholesale level inflation, and that would go back to the Feds and when they need to raise rates. A lot of people are thinking September. It could be as late as December. It could be early 2016. I personally think that it's going to be a little later than that. Now, have said that, I'm kind of bucking the trend because we did have on Friday non-farm payroll, and it was a big number. It was about 280. People were looking for it to be less than 250. So the economy is growing. We are creating jobs, and that would motivate the Feds to raise sooner than later. Now, have said that, I don't think they will. They're definitely, in my opinion, are not going to raise rates in late June or July. So it's probably September at best, or earliest, if you will. Let's take a look at the technicals in the S&P June contract, which you want to get probably ready to roll and roll very quickly. The spread between SEP and June is probably 4 or 5 points. So just add or subtract 5 points if you're wanting to look at September. But looking at my homework, or my due diligence, if you will, I'm having to say that we are still sideways to up in your trend. The bull market of 5 years is still alive. I would have to say we're trading right around 2088. We're down a couple of points. We've had 2 weeks in a row where we closed lower for the week, but not a lot of damage on the charts. And I still think the charts are saying that we are moving higher, and least resistance is to the upside, and the trend's your friend. But those are my opinion only. Now, have said all that, looking at the charts, 2102 would be resistance. If we can close over that, then 2117 would be resistance. And if we close over that, we'll probably go to 2139. Now, on the way down, if the bears want to try to take control, 2085 would be probably your threshold of pain. A close underneath that 2 days in a row or for the week on a Friday would put some damage on the charts, but not sufficient to get out of that large trading range that we've talked about for probably a couple of months. Now, the trading range would go all the way down to 2035, but your next level after 2085 would be 2064. So those are my key numbers, support, resistance, pivot numbers, if you will, to look at on the charts. Good luck and good trading. Trading futures or option on futures may involve substantial risk and may not be suitable for all investors.